Welcome back to Investing Talk Podcast. We're taking a deep dive into Lockheed Martin today. For you guys listening, you send in some really interesting stuff like recent stock analysis, news reports, and some technical breakdowns. And, our mission today is to kind of unpack all of that and help you understand what's most important right now about Lockheed Martin.
I think the most interesting thing to me right off the bat is how this major event, this contract loss, kind of interacts with some of the underlying strengths of the company and the continued interest that we're seeing from some of these big institutional investors. It really is a fascinating situation.
So let's just dive right into that big story first. The one that seems to have been driving a lot of the recent movement, Lockheed Martin losing that huge U.S. Air Force contract for the next generation fighter jet. And this wasn't just any contract. This was a multi-decade deal, potentially worth over $50 billion, and it went to Boeing. So I guess, the question is, how did this news actually impact the stock?
Well, I think the market reaction was pretty clear. I mean, as you mentioned, the share price took a pretty big hit, immediately following that announcement. And really, this just goes to show how important, how crucial these large long-term contracts are to the valuation of these defense companies. The NGAD contract, wasn't just about the immediate revenue. It was really seen as this key future growth engine and a chance for Lockheed Martin to, really solidify its leadership in that, advanced fighter technology. So, losing it obviously caused, some investors to reassess their expectations about where the company was headed, at least in that specific area.
So you're saying that immediate reaction to the NGAD news was a drop of over 5% in Lockheed Martin stock price. As of March 21st, 2025, it closed at $439.70.
Yeah.
So it really kind of highlights how big a deal these wins and losses are.
Yeah.
In this sector.
Well, absolutely. I mean, a contract of that size, it influences not only, the projected earnings, but it also really affects the market perception of a company's technological edge, and its
Yeah.
ability to win business in the future. It sends a powerful signal.
Now, even with this pretty significant setback, Lockheed Martin still has a really big market cap, right? I mean, we're talking like around $103.63 billion. And it's also worth noting that their dividend yield is 3%, which translates to an annualized dividend of $13.20 per share. That's got to be something that long-term investors, are watching.
For sure. I mean, that dividend, that offers investors a very tangible return, and it can actually act as a bit of a cushion, during times when the stock price is fluctuating. So for investors who are, really focused on generating income from their portfolio, a yield like that from a company with such a, long history can be pretty attractive.
Here's something that I find kind of interesting. Despite the stock price going down, it looks like institutional investors are either kind of maintaining or even increasing their positions in Lockheed Martin. We saw that Intellus Advisors, acquired a new position in the fourth quarter. And then you've got firms like American Century Companies and Mizuho Securities USA. They actually added to their holdings. So what do you think? What could be driving this continued or even growing interest?
Well, I think this really highlights an important point about how institutional investors approach things. That these firms are often looking, beyond the immediate news cycle. They're trying to see the bigger picture. They probably see value in Lockheed Martin's broader portfolio. They see the existing programs. They see the overall financial stability of the company, and frankly, they see the long-term prospects in the defense industry. It could be that they believe the company will win other significant contracts down the line, or maybe they see this current dip in the stock price as a buying opportunity. Whatever it is, it seems like they have this longer-term conviction about the company and its fundamental strengths.
So speaking of those fundamentals, if we kind of look past the NGAD loss for a second, Lockheed Martin's recent earnings report actually showed pretty strong earnings per share, right? $7.67, which was better than what the analysts were predicting. So, that kind of suggests to me that there's underlying strength in other areas of their business. How important is it that they have this strong backlog and a diverse portfolio, when it comes to mitigating the impact of losing this one contract?
It's incredibly important. I mean, a company like Lockheed Martin, they're not just dependent on a single program, no matter how big it is. They're involved in so many different critical areas of defense, from aircraft to missiles to space systems, and that gives them this layer of resilience. A strong earnings report, it's a signal that these other segments of the business are doing well and they're generating a lot of revenue. And that can definitely help offset the future revenue that they would have gotten from the NGAD contract. It just shows that they have a much more robust, much less vulnerable business model.
Now, we've also seen that some analysts, like Matthew Akers from Wells Fargo, are remaining optimistic. They're even raising their price targets for Lockheed Martin. And this positive outlook seems to be partly driven by, the potential for increases in defense spending, because of what's going on, globally. So that's a pretty different perspective from the initial kind of negative reaction to the contract news.
Yeah, and it's kind of unfortunate, but if you kind of connect this back to the bigger picture, to what's happening globally, often when you have these periods of increased geopolitical instability, it leads to bigger defense budgets across different countries. So analysts who are anticipating this trend, they might see this recent drop in Lockheed Martin's stock as kind of a chance to buy in. They might be expecting future growth in revenue and profitability because of this increased spending, and that could be driven by both their existing programs and new ones that come up. It's almost like they're betting that these macro trends, the bigger global picture, will outweigh the impact of this one contract loss.
There's also been this discussion going on, about how Lockheed Martin might actually be a better defense stock to own right now compared to Boeing. And a lot of this is because, they're purely focused on the defense sector, and they also seem to have more attractive valuation metrics, specifically a lower forward price earnings multiple. For investors who are trying to decide between these two companies, I mean, what does that difference actually mean?
Well, it's interesting, right? Because there's this fundamental difference in how these two companies approach their businesses. Lockheed Martin is almost entirely focused on the defense industry, whereas Boeing has this huge commercial aviation business as well, and that comes with its own set of dynamics and its own challenges. So when we talk about this forward price earnings multiple, that's essentially the company's stock price divided by its estimated earnings per share for the next year. And when you see that it's lower for Lockheed Martin, it suggests that the stock might be undervalued relative to its future earnings potential. And this is especially true when you compare it to a company like Boeing, which operates in these different and sometimes more volatile markets. So for an investor who's really just interested in defense, that pure play aspect of Lockheed Martin can be really appealing.
All right, so let's shift gears a little bit and talk about what the technical charts are telling us. On March 21st, trading volume for Lockheed Martin was high, over 7 million shares, just a lot of activity. And the stock price is currently below both its 50-day moving average, which is around $460.94, and its 200-day moving average, which is at about $515.23. So, technically speaking, what does that tell us?
Well, from a technical analysis standpoint, breaking below those key moving averages, it often suggests what we call bearish sentiment, right? So think of these moving averages like trend lines. When the current price is consistently below them, it suggests that the stock has been, trending downwards both in the short term and in the longer term, which, can indicate some weakness in investor confidence. However, it's important to note that the relative strength index, or what we call the RSI, is likely in what we call oversold territory. And the RSI it's this technical indicator that we use to kind of gauge if a stock has been, bought or sold too aggressively. And so when it dips into this oversold territory, it can sometimes suggest that the really intense selling pressure might be starting to ease up, which could lead to, the price stabilizing or maybe even a little bit of a recovery.
So if we put it all together, from a technical standpoint, would you say that the current recommendation is to hold? I mean, even though the recent trend is looking kind of bearish, you've got this oversold condition and you've got the company's strong fundamentals, which, to me, suggests that this is a situation that maybe you just want to watch closely rather than, immediately selling off. What are some of the key things to look for, in terms of technical indicators?
Yeah, I mean, I think, the most important indicators to watch would be the stock's ability to stabilize, to stop going down? And then importantly, can it break back above that 50-day moving average? Because, that would be a signal that maybe the short-term momentum is starting to shift. We'd also want to see if the RSI, comes out of that oversold territory and starts trending upwards. Those would be some early signs that maybe the downward pressure is starting to let up.
Okay, so let's bring it all together, right? We've got this company, Lockheed Martin. They've definitely faced a big hurdle with this contract loss, and that's clearly reflected in the stock price. But then on the other hand, you've got these strong arguments. You've got the solid earnings, you've got the continued interest from these big institutional investors, you've got a potentially more attractive valuation compared to one of their main competitors, and then you've got the possibility of increased defense spending overall, which could act as kind of a tailwind for the industry.
Yeah, I mean, this really goes to show, how complex investing can be. A single news event, even one as big as this, can really trigger some immediate reactions in the market. But you gotta dig deeper, right? You gotta look at the broader context, the company's financial health, its competitive position within the industry, and the bigger picture, the economic and geopolitical environment. All of these things play a role in shaping the long-term outlook.
Yeah. And then from the technical side, even though the analysis is pointing to a bearish trend, both short term and long term, that potential oversold condition does introduce the possibility of things stabilizing. So ultimately, for you as an investor, looking at Lockheed Martin, it seems like the takeaway is, you got to take that long term perspective and just keep a really close eye on what's happening in the industry and on those key technical signals. I mean, this whole situation really highlights how volatile and competitive the defense industry can be. I'm curious, what are you personally going to be watching most closely in the coming weeks, when it comes to Lockheed Martin?
Yeah, that's a great question. I think for me, I'm really going to be paying attention to how Lockheed Martin addresses this contract loss in their upcoming communications with investors. Are they going to announce any big new contract wins? Or are they going to outline some strategic adjustments to kind of compensate for this loss? And then, I think the market's reaction to their next earnings report is going to be really telling. We'll get a better sense of how well their other business segments are performing and whether they can maintain that strong underlying profitability.
Well, folks, if you found this in-depth look at Lockheed Martin helpful, we encourage you to subscribe, like, and leave a comment with any further questions that you might have. We're always looking for new topics to explore, so let us know what's on your mind.
And until next time, happy investing.
Take care, everyone.